Too late for crypto, what Aussie and New Zealand investors must know. It's easy to see why people think the window's closed. Bitcoin has been above 100k for over 100 days, Solana and XRP are already well off their lows, and Ethereum's back in the headlines. Suddenly it feels like the whole world's jumped on the crypto train again while you're still stuck at the station, staring at the minimal gains in your savings account. But here's the thing about crypto, it moves in cycles, booms and busts, ups and downs, over and over again. Right now, we're likely not quite at the end of the cycle just yet. We're right in the thick of it. In fact, if history repeats itself, and it often does in crypto, we're still early in the post-halving growth phase. That means the biggest moves might still be ahead. Bitcoin's price alone could still surge up many multiples. So I'm going to break it all down for you. Where we are in the market cycle, what's likely next, and how you can still build some serious gains without playing roulette on the latest meme coin. Before we can figure out if crypto is still worth buying in 2025, we need to talk about one of the biggest things that moves the market, and funny enough, it's actually one of the easiest events to predict. Even if you've never bought crypto before, imagine a factory that makes a limited edition product, and every 4 years that factory just decides to cut production in half. Over time, they end up making less and less of these items, which makes them harder to get and more valuable. Bitcoin kind of works the same way. About every 4 years, there's an event where the reward miners get for validating transactions on the Bitcoin blockchain is cut in half. This means they only get half the amount of new Bitcoin for the exact same amount of work, which makes the supply even more limited and can push the price up. Why does that matter? Because whenever supply gets cut and demand stays the same or increases, the price tends to go up, which is very simple. This process is called the Bitcoin halving, and guess what? April 2024 was the last halving. That means we're in the 12 to 18 month window where historically Bitcoin and the rest of the market tends to see massive increases in price. The first Bitcoin halving in late November of 2012, the block reward was cut from 50 Bitcoin to 25. So the price at the time of the halving was around $12. The price peak after halving, Bitcoin's price gradually started rising and reached over $1,100 by late 2013, an increase of more than 9,000%. The first halving marked the beginning of Bitcoin's parabolic rise, with its price increasing significantly over the following year, driven by increasing demand as the supply of new Bitcoin decreased. The second Bitcoin halving in 2016, the date was the start of July 2016. The block reward was cut from 25 Bitcoin to 12.5. The price at halving was around $650. The price peak after the halving, Bitcoin's price rose steadily throughout 2016 and into 2017, hitting an all-time high of nearly $20,000 by December of 2017, an ROI of more than 3,000%. This second halving was part of a major bull run, with Bitcoin reaching unprecedented heights, largely due to growing interest from retail investors and heavy mainstream media coverage. As the cycle reached its peak, the third halving happened in mid-May on May 11th of 2020. The block reward was cut from 12.5 to 6.25 Bitcoin. The price at the halving was around $8,700, with it reaching an all-time high in November of 2021 of $70,000, a return of roughly 800%. The 2020 halving contributed to a massive price rally fueled by growing institutional adoption, global economic uncertainty, and a rise in retail speculation around DeFi and NFTs. This last fourth halving cycle is unique because the Bitcoin price hit a new all-time high above the 70,000 head of the halving event, driven by bullish momentum from the new Bitcoin ETFs. So far, the price of Bitcoin has only climbed around 85% since the halving, which is decent but not massive. And if history is anything to go by, there could still be a big move ahead, since in past cycles, the real surge often comes 12 to 18 months post-halving. Every past halving cycle, Bitcoin increased increased by at least 800% from its pre-halving price, but with diminishing returns for each passing cycle. We're just over a year into this current cycle, which means there's likely still time if you play your cards right. But remember the old saying, what goes up must come down, and always be mindful of where we are in the cycle so that you don't round trip your gains all the way back down. Where should you be looking to invest in 2025? Now that you get how Bitcoin's dominance shapes the whole crypto market, the next question is, where do you actually put your money? Because in crypto, picking the wrong coin can mean losing the whole lot. And I'm not talking about a small dip. I mean, some coins have dropped over 99% or more over time. Taking a look at the price chart for Terra Luna, to figure that out, you've got to know your risk tolerance, and that's closely tied to crypto's market cap. This is just the total value of a cryptocurrency. Bitcoin's the heavyweight champ here in Australia and New Zealand, just like it is everywhere else in the whole world. When Bitcoin moves, it's like the tide rising or falling, and the rest of the market follows along. Coins like Solana might move 1.5 to 2.5 times as much as Bitcoin, so if it jumps 10%, you might see Solana go up 15 or 25%. But when the tide goes out, the reverse happens, and those same altcoins can sink fast. And for Aussies and Kiwis, that can mean the difference between having a nice little profit to cash out or being stuck watching your portfolio evaporate before your morning flat white. If you're investing outside of a market cycle, it's kind of like driving through thick fog on a winding New Zealand back road or the Great Ocean Road in Victoria. You might still get where you're going, but it's slow and unpredictable. In times like that, Bitcoin is like a lighthouse and the biggest and most steady thing in the crypto space, so it doesn't get tossed around as much by the market's mood swings. Right now, Bitcoin makes up about 60% of the entire $4 trillion crypto market cap. It's the elephant in the room you just can't ignore. Ethereum's next at around 500 billion, and then you've got smaller coins like Dogecoin worth about 34 billion, which is less than 1% of the whole market, like a tiny fish in the Tasman Sea. If you're chasing bigger returns, you don't mind taking on more risk, you could look at smaller cap coins, but for most people, a smart move is to keep most of your money in the big names like your Bitcoin and Ethereum. They're basically like the Apple and Microsoft of the crypto world. For the right risk, high reward stuff, you might dip into smaller market cap coins or meme coins like Dogecoin and Shiba Inu. That's a bit like punting on meme stocks such as GameStop back in the day. It could pay off huge or you could lose the whole lot. It's the crypto version of buying into a risky small cap on the NZX or ASX, hoping it'll explode in value. If you're just starting out and want somewhere steadier to park your money, Bitcoin and Ethereum are still your safest bets. They're like the blue chip stocks of crypto. In the last halving cycle in 2020, Bitcoin jumped 540% and Ethereum went up over 2000%, which shows that big market caps tend to be more predictable, while smaller cap can rocket to the moon or crash back to earth faster than a bungee jump in Queenstown. So the reason Aussie and Kiwi investors are in a sweet spot but don't know it is because now here's the part that doesn't get talked about enough. If you're living in Australia or New Zealand, you're actually in a better position than a lot of global investors. While the crypto industry regulation is still in progress, we've got relatively easy access to quality exchanges and trading platforms like Swyftx, the sponsor of this video, who operates in both Australia and New Zealand. Their platform allows you to trade over 440 coins with low trading fees starting at just 0.6% and reducing automatically as your trade volume increases. Swyftx also features the latest trading tools like detailed charts, auto investing, limit orders, and crypto bundles, which allows you to purchase multiple assets in one transaction, making it easy to get into crypto or diversify your portfolio. All these details on their website, swyftx.com. Check out the affiliate link in the description box if you want to sign up and make an account. You'll get a free $10 when registering. The biggest risk now is not doing anything. Here's the real truth. Doing nothing is a choice. Waiting for the perfect entry is a choice. And that choice can cost you way more than a 20% dip. Every cycle, the people who sit back and wait for things to cool off are the ones who get left behind. By the time mainstream media is shouting about new all-time highs again, it'll be too late. That's when retail gets wrecked. So now's the accumulation phase, the building phase, the part of the cycle where the smart money gets positioned. So no, it's not too late, but it's not early either. The clock's ticking and you've got to move with intent. So now that you know how the crypto market works and where to put your money, the next thing to lock in is keeping it safe. It's sadly not rare for people to lose millions from hacked wallets, dodgy coins, or exchanges that took a gamble and lost their investors' cash. So make sure to check out my next video where I'll show you the biggest mistakes to avoid so you don't end up losing your hard-earned cash.